government policies are mostly centered around the industrialization basket. Broadly speaking, there's been a wide range of incentives to encourage the migration of supply chain functions from various industries into India. For example, in the solar panel industries, there's lots of incentives to encourage the growth of that industry. Likewise, in trying to attract the semiconductor industry to support lots of electronic manufacturing in India, it is happening. Third sector that is happening is the automotive supply chain. Fourth sector that's happening is the pharmaceutical sector. There are various sectors that are benefiting from a range of tax incentives.
For Malaysia, with stability of the government, Prime Minister Anwar has been able to roll out various economic development policies. The key ones include National Energy Transition Roadmap, or NETR, New Industrial Master Plan 2030, and National Semiconductor Strategy. The NETR outlines the country's strategic plan to transition toward a more sustainable and low-carbon energy system, while the New Industrial Master Plan is designed to transform and elevate the country's industrial sector over the next decade. As for the National Semiconductor Strategy, it is a comprehensive framework aimed at positioning the country as a global leader in the semiconductor industry. All these economic development policies present potential investment opportunities in Malaysia if the government can execute them well. For Indonesia, the pro-growth Prabowo administration could encourage a broadening of growth in various industries, which has been dominated by the strong performance of the banking sector so far. As mentioned, the consumer space could also benefit on the back of government policy to support the low-end economy, with policies such as the free lunch program and minimum wage increases, while the construction and cement and housing sector can also benefit from government focus to increase housing supply in overcrowded metropolitan areas. Government initiatives in support of EV adoption for transportation can help develop a circular EV economy from mine to motor, as Indonesia has been encouraging EV manufacturers to take advantage of the country's abundant nickel reserves to develop an EV ecosystem. As for Thailand, the Thai government has communicated an expansionary plan. This includes continued efforts to digitalize government services, encouraging the integration of AI in companies, attracting FDI higher up in the value chain, promoting tourism, focus on tackling the high household debt situation, and introducing gaming casinos to the country. If executed well, it could encourage investments in sectors that should benefit like IT services, infrastructure suppliers including data centers, industrial real estate developers, tourism-related service providers, banks, finance, property, construction, and consumer companies.
The investment opportunities in India are mostly in industrials and shifting consumption trends. Within industrial, the key themes are defense indigenization, an urgent need to build power connectivity and capacity, train infrastructure. There is also a theme of domestic manufacturing and a theme of growing exports. Various capital goods and building materials play into this theme. These include names from industrial, pharma, auto components, and materials company. In the second basket, one has to look out for how consumption trends are changing as affluence build up, as distribution channels evolve, and as young consumers become a bigger force among the consumer pool. As wealth builds up, real estate demand is real. So is the theme of financialization of savings. One can look for ideas in these baskets.
For Malaysia, following on from the various economic policies mentioned earlier, there are certain potential bright spots worth exploring. Within the NETR, the utilities sector do look interesting, especially with Malaysia committed to increasing its renewable energy investments and improving its national grid. The new Industrial Master Plan has also provided potential investment opportunities in areas such as infrastructure and industrial development, including data centers development. Malaysia remains a key player in electronics and electrical manufacturing, particularly semiconductors. The rise of AI, Industry 4.0, focus on automation and smart manufacturing, coupled with the government's national semiconductor strategy, where incentives will be provided, should present further investment potential. In Indonesia, besides the banks which have done well so far, we expect other sectors to benefit from the pro-growth, pro-bono administration. The commodity sectors, such as in agriculture and metals like copper and nickel, could see improving fundamentals after the cycle of weakness in 2023, especially if the EV ecosystem in Indonesia develops. With the increase in minimum wages and certain policies to help the low-income consumers, we expect the consumer sector to do well, while the construction and cement sectors should benefit from the government's plan to increase housing supply. For Thailand, tourism and healthcare-related companies should continue to benefit from longer-term growth trends. In tourism, higher tourist arrivals should persist because Thailand keeps ranking high as a destination for tourists visiting Asia and Southeast Asia region. For healthcare, greater demand for private healthcare from Thai nationals and more foreign patients seeking medical care in Thailand should sustain earnings growth for the sector. With the potential pickup in economic recovery on the government's expansionary plans, the consumer sector could also do well in the near term.